Parametric insurance is emerging as a key tool for climate risk. With strong uptake in Asia Pacific and global growth over 12%, it's now a top priority across sectors. Arup Chatterjee from ADB joins us to explain why. So, Arup, what's driving parametric insurance adoption in Asia Pacific?
Parametric insurance adoption is accelerating today, growing at 19.2% annually globally. From $2 billion in 2015, today it stands around $15.1 billion, and it is about 0.2% of the global market. When you look at Asia Pacific, it is 15 to 20% of that global volume, which is about $2 to $3 billion. Today, it covers 28% of agriculture, 33% of infrastructure, and 57% of disaster recovery risks. What is driving this adoption? A, record-breaking climate events. B, demand for fast, transparent payouts. C, advanced satellite and IoT data. D is policy reforms and insurance innovations. And E is rising consumer awareness. Japan, Australia, Indonesia are leading the way. Indonesia launched a national parametric disaster program for floods and earthquakes. The program now insures about 11 million public assets, so the momentum is building.
And what types of climate risks are best suited for parametric coverage?
Parametric insurance works where there's modeled risk exposure data. There is a measurable trigger like drought. You need precipitation data. For flood, water levels. For cyclones, wind speed. For heat stress, it is temperature. For pollution, it is air quality index. For earthquake intensity, it is the Richter scale. So in parametric insurance, instead of waiting for damage assessments in conventional insurance, payouts are made automatically when thresholds are met. In India and many other countries, farmers who once waited months for drought relief now receive payments within days. In Fiji, mobile-based models now support low-income households after storms. These systems use satellite data and automated indices to trigger payouts quickly and transparently. With growing support from governments and even regional groupings like the ASEAN and the CAREC, parametric insurance is becoming a powerful tool for building scalable, inclusive climate resilience across the region.
We understand that there are still barriers to this. With that, what specific ones limit broader adoption across markets?
Parametric insurance claims payment is fast, but it is not foolproof. It pays based on preset triggers, not actual damage. That's where basis risk comes from. When Typhoon Rai hit the Philippines in 2021, over 1.2 million buildings were damaged, but some policies didn't pay because wind speeds fell just short of the trigger. So no payouts results in big trust issues. When you see agents, they are also hesitant to sell it because it's too complex to explain, and commissions are also low. From an insurer perspective, who see from a risk-layered lens, those who are focusing on indemnity products lose access to profitable segments of the portfolio to parametric insurance providers. This compresses margins and reduces overall profitability. Reinsurers are also cautious too. Data quality, model reliability, and reputational risks are harder to price than traditional insurance products. Further, data is costly and risk infrastructure is lacking in many of our developing countries. The challenges are also in public understanding due to its reliance on predefined parameters rather than actual losses. So to scale parametric insurance, we need better data, smarter triggers, and more transparent communication and financial literacy.
Now, in terms of support or even regulations, how is the government handling parametric solutions?
Parametric solutions are gaining traction, especially in the Asia-Pacific region. As of 2025, 19 jurisdictions are updating regulations to support parametric insurance and catastrophe bonds. Governments are stepping up. India, the People's Republic of China, Mongolia, Cambodia, Fiji, Papua New Guinea, to name a few, are piloting models to manage climate and disaster risk. Singapore and Hong Kong are offering incentives to attract jurisdictions for catastrophe bond issuances. Governments are also investing in risk data infrastructure to improve the accuracy and transparency of the data thanks to satellite information, sensors, and analytics. ADB is also promoting parametric tools and will be soon adding catastrophe bonds into its disaster risk financing toolkit. Regulatory collaboration is growing with efforts to standardize parametric products and build market confidence. So, to scale these solutions, we need clearer regulation, more robust and verifiable data, and policies that build trust and protect communities.
Thank you so much for joining us today, Arup.
Thank you very much.
Once again, that was Arup Chatterjee, Unit Head of Capital Markets and Insurance Practice Team at Asian Development Bank. For more news, visit insuranceasia.com.